So again, guys, I credit today's video to ICT, AM Trades, and TTrades. I basically learned the foundation for daily bias from them. The foundation of this daily bias, or the way we approach this daily bias, is foundational to the model that we're currently trading, which is the 5-minute Q3 expansion or manipulation to 4-hour expansion model. If you guys are unfamiliar with what I'm talking about right now, this is Adrian H's model that we are testing as a group. We test this every Tuesday, Thursday, and Saturday together. And part of that model is to first determine daily bias, and then you do that by marking out previous day high and low, and you mark out OTE and fixed range volume profile within that daily range, and you would mark it out in the direction of the previous day's close. So again, for those of you that are just joining, if you have watched ICT's Mastering High Probability Scalping series, if you have watched AM Trade's weekly profile video, or you have watched TTrades daily bias video, today's session will not be of benefit to you. You probably know everything in today's session that I'm going to go over. So a very mechanical way to approach daily bias is to simply go by previous day's close. Okay, so just starting at a random point, the beginning of the year. This is the last day of last year. Tuesday, December 31st, closed bearish. And what I'm going to do is I'm going to keep a tally here on the chart so that we know how well we did. So we'll just go with wins, losses, and neutral. You'll see what I mean by neutral in a minute. Okay, so previous day closed bearish. Daily bias for today is bearish. So we tagged previous day low. As long as we tag previous day low, that is the daily bias being confirmed as bearish, right? So if we're bullish, we're aiming for previous day high. If we're bearish, we're aiming for previous day low. This is a very simple daily target every single day. So 2 levels that I would recommend that you have on your chart every single day are previous day EQ and previous day high and low. So I guess 3 levels. And again, you're aiming for high or low depending on how previous day closed. So again, yesterday was bearish, so today we were going into the day bearish, aiming for previous day low. So that is 1 win. Now we were able to close below previous day low, right? Although we have this wick here, since we closed below previous day low, we will again aim for previous day low. Alright, so no previous day low here. We instead closed above previous day high. Alright, so 1 loss. Now that we have closed above previous day high, we're aiming today for previous day's high. Previous day's high hit. And again, we've closed above previous day high, so we're aiming for previous day high. No close above previous day high. Instead, we close below previous day low. So today we are aiming for previous day's low. All right, so we tag previous day's low, but we get a sweep above. We get a sweep of the low. We don't close it, and we close inside of the range. Okay, inside of the range meaning this. So this is previous day's range altogether. I'll just do premium and discount. And the range from low to high, we close inside of the last candle's range. Okay, so we sweep the low, just wick it, close inside. This is what Adrian has shown you guys as a swing fail pattern. SFP, swing fail pattern. This is what TTrades calls a reversal pattern, right? A reversal candle, or if you follow him a little bit more closely, this would be candle 2 in the TTrades fractal model. I also look at it as a reversal candle. I don't necessarily go by swing fail pattern, but that definitely works. And then otherwise, retail will know this candle as like a doji, I think, or a hammer, something like that. Guys, correct me if I'm wrong if you know the answer. But because we swept previous day's low and we closed inside the range, we are now aiming for previous day's high. Okay, is everyone following so far how I'm coming to the conclusion every single day bias? So this was a win for previous day low. If you guys have questions, feel free to stop me. Sweet. All right, so we're aiming for previous day high. Again, we did not get previous day high. We did not get previous day low. Now, this is a good example here. We have an inside day. Okay, so inside days will happen in which you did not tag previous day high or previous day low. Now, with an inside candle, you are more than likely, this is more than likely to be a retracement, and it's more than likely going to continue in the direction of previous day's bias, right? So because we swept the low and we were looking for previous day high, and then we have an inside candle, our target still remains previous day high, right? This is just to show you that we did not close previous day low. However, you can just choose, I know this is so hard for many of us to do, but you can choose to not do anything this day, right? Like you can once or on the next day when you don't have a bias based on an inside day happening, you can just choose to sit out this next trading day, or you can aim for the bias of the previous day. The same, you can maintain the same bias that you had on the previous day. I'll give you an example here. In my own trading, my weekly bias last week was to go for all-time highs, right? I actually wanted, for my low, my possible low of the week, I wanted to get previous week's low during this week here. This is the weekly candle. Let me turn on my demonstration so you guys can see my mouse. Down here in the bottom right corner chart, during this week, which was last week, not this past trading week, but last week, I was accepting that we could go as low as previous week's low before going to all-time highs, okay? Instead, it ended up being an inside week. We did actually sweep previous week's high, but we closed inside the range, okay? Now, coming into this week, because we barely swept it. We barely swept it. And this is pretty much an inside candle for the most part. I opted to go with my same bias that I had, was that I wanted to go for all-time highs. So what ended up happening this week across all the indices, which we discussed in our weekly review with Adrian on Thursday, if you guys attended, YM did in fact sweep that previous lows week like I wanted. ES did sweep its previous week's low as well. Not the previous week before that, but last week, the week that I wanted the previous week low to be swept. So we got SMT here at these lows across all indices. And so this confirmed that I can follow the bias from my last week and not change my idea, that I still wanted to go for all-time highs. So that's how you would use an inside candle. So for this, I'm going to write this as neutral for this one, or I'm going to score this as neutral for that one, since we weren't wrong. It didn't go for previous day low, but it also didn't go for previous day high. So again, I'm going to maintain the same energy here, and I'm going to aim for previous day high. All right, so previous day low is what we get. We'll mark this one as a loss. And now we are aiming for previous day low. All right, so previous day low swept. And now we are closing inside the range, right? But we don't close bullish. So this is also an example here for me in which I find that in the next day after this, you can still mostly be neutral. When we close inside the range, I'm really looking for a bullish candle to close inside the range when we sweep the low, right? Versus when we sweep the high, I'm looking for a bearish candle to close inside the range. Now, for more advanced theory here, let me just mark this before I continue. For more advanced theory here, what I want you to consider is EQ of the wick, which is known as consequent encroachment in ICT world. So when we sweep the low and we close higher, we close still within this candle's range, but we don't necessarily close bullish, then you can simply bring up 50% of this wick. This will be a little bit more advanced, right, for daily bias. We did not close below CE of this wick. So as a result, I would aim for previous day high in this scenario, right? Because you also have a daily SIBI here. So if anything, price is going to reach up into this daily SIBI, even if it doesn't close above this candle. So we'll aim for previous day high. We tag previous day high. So again, exactly what I mentioned. We tagged it, right? But we ended up closing lower. So the daily draw was met. If you were long at any point after the open, you would have gotten a decent amount of points. You would have tagged previous day high as your final target, but the day closes lower and it doesn't stay up here, right? So we don't know at what point of the day that happened. That's not our concern for now. Again, this is just a very simple approach to daily bias. So then now that we've closed lower, this here now you can be neutral again on the next day. Okay, so daily bias does not mean that you have a bias every single day, but you have some sort of idea of how you can approach the day. So because we tagged previous day high successfully, but we closed inside the range, you can use advanced theory again here. So you can draw the CE of this wick and you can draw the CE of this wick, right? And you can choose to aim for these lows for sure in this case, but because you were not able to close above the CE of this previous wick, you also were not able to close below this low of the low that we've swept multiple times. This would be a good day, in my opinion, to remain neutral. So you do not take I wouldn't take any trades, or you can choose to not take any trades on this day. Gummy Bear, you can find the recording of this video posted in my channel, Backtest Jess, in the server. It's under London and Asia session. I'll just link my channel here. Hey Surgical, how's it going? Alright, so again, I would approach this day as neutral. So no bias going into today, so I'm not going to mark out either side, and I'm going to let price tell me what it's going to do. Alright, so very bullish close. See, so 4 down close candles in a row. Most people would still probably be bearish at this point, but that's why I mentioned the more advanced theories where you can look at CE. You can consider that we haven't closed that low. This low we did actually stay below, so that's why I wait for price to tell me exactly what it wants to do. So we'll mark this as a neutral day. Alright, so now very bullish close. We closed above 3-day highs, so we will now aim for previous day high. Previous day high tagged, and we close inside the range. So again, we're not using any other context, right? We're not using weekly profiles. We're not using news. We're literally just looking at the daily candles. We're not looking at anything else. We're looking at candle closures only. So we've swept previous day high. We closed inside the range. And again, what we have now is a swing fail pattern. So now pulling up EQ of this day, or we're just pulling up previous day's range. We swept previous day high and we tagged EQ. But we were not able to close below it. Okay, so this is a key point here. Now mechanically, I would still aim for previous day low, right? Because you do have a BISI here. But for you to apply advanced theory here for yourself, you can consider, because most of the time the market is bullish. And when I say most of the time, 60 to 80% of the time the market is bullish. I have data on this that I'll pull up for you really quick. So this is manual testing, okay? Let me copy the image for you guys. Manually testing since the beginning of 2023. This is not computer generated data. This is all tested by hand. 80 weeks have been bullish, 49 weeks have been bearish, so that's 62% of the time the market is bullish. Okay, so you can be bullish here for sure, because we did not close below 50% of the day. Now another thing you can do for more advanced theory is you can pull up the body 50%. So they're around the same area. We wicked both of them, and we were able to stay in premium. So I would say most of us being mostly bullish all the time, with only like a few outliers of us having a bearish bias pretty much all the time, or willing to take shorts all the time. Most of us would probably continue long. We'd wait for this BSI to get tagged, and then we'd look for an area to get long. Now again, approaching this mechanically, I would just aim for previous day low. I'm willing to take the loss here. So previous day low not tagged. We close bullish instead. Again, applying that advanced theory, you can figure that out, right? And now we close above previous day high, so our target is again previous day high. Previous day high tagged. Oops. Ooh, I didn't realize I could do that. All right, previous high closed above, aiming for previous day high again. So we open at previous day high and go higher. So we probably open above it, like gapped up, came back to retest it, and then closed higher. I'm gonna leave this as a neutral because we didn't open below it and had an opportunity to trade into it, because more than likely lower time frame there was no way to catch the target into previous, or catch the long into previous day high. So you would have had to trust the retest of previous day high to go lower. So oops, I did that wrong. Hold on. There we go. 3. So again, firm close above previous day high. Any questions, Stefan? I saw you typing. You can feel free to ask away. I'm gonna pause here to ask if you guys have any questions. I think you guys get the idea. I'll go through at least until the end of January so that you guys can get the gist, and I can even do another month if you want. Yeah, thank you, Stefan. Love it. All right, so, and I'm just gonna clear the charts actually. Well, no, I'll leave it. I'll just remove the CEs. All right, so previous day high. So again, no close into previous day high, right? But we get an inside day instead. And so the next day's target can still be previous day high. Another thing you can do here to apply more advanced theory is you can just mark out CE. So we marked out CE and we did tag it, right? We didn't get it closed below it, so it's possible that we could be wrong and this can go for previous day low instead. But with these low resistance lows like this, highs like this, and with the day being an inside candle, I would still aim for previous day high. Again, same example as it was down here, right? Like we closed inside the range, right? And then we have all these lows here, so mechanically I approached the low instead, but I gave you reason to believe that we could go higher and why you could be offside there. And the best thing to do when you are strongly both sided, or you're unopposed to the other one happening, is you would simply approach the day with 2 scenarios. Okay, so for example, here we can say, okay, I think this is just going to go straight up for previous day high, so we're going to get some sort of continuation pattern. Oops, I forget we're on the daily chart. We're going to get some kind of continuation pattern where we open from here, tag previous day high, probably retest previous day high, and continue higher. Just straight up continuation. Or if I'm wrong, we will go for, or if it wants to go lower first, it'll go for the daily BSI first and then go for previous day high, right? This way, when you're opening up yourself to more possibilities, you are more adaptable in live price action because you were able to anticipate these different scenarios as possibilities, and you were able to be open to these different scenarios. And as a consequence, you are not taking it personally when you take a loss. You are not taking it personally when you get it wrong, because you're not like, oh, I suck as a trader. Oh, I don't know, my daily bias was wrong. Instead, you say, okay, this idea didn't work out. I planned for another idea to work out, right? And this just makes the blow easier to take for most traders, especially when you're new in the game. All right, so look at that wick CE holding. Again, we did not close previous day high, and instead we did sweep previous day's low. Thank you so much, Surgical. I appreciate that. Which one am I going to use? I'll use this one here. Okay, so previous day low tag, we'll mark this as a loss. 5 and a few more days to go. So again, this is another situation where we did not close the high, we tagged the low, and obviously we are sweeping a BISI here. All right, again, this was anticipated. It can go down and sweep this BISI, and we didn't close this low, right? So you can choose to be neutral on this day. Believe it or not, you do not have to trade every single day. Or you can choose to go with the previous bias that we've been aiming for. We now have all these relatively equal highs, right? Again, this is just applying more advanced theories and more discretion for you to decide if you want to aim for previous day high or not. Or you can just mechanically approach previous day low. For me, mechanically, because we did not take the high and we did not close the low, I'm going to remain neutral on this day and not take a trade. So I will let price show me what it wants to do. So huge gap down, we open below the gap and take out all the liquidity below us, and obviously we close previous day low. This is why you wait for price to tell you what it wants to do when you're unsure. It's not a bad thing to be unsure. It's even, I would argue, conservative, and you always want to conserve or preserve your capital so that you can live to trade another day. So firm closed below previous day low. We did sweep a lot of this, right? We didn't actually close this low. I think we did sweep this one. Yep. So we did sweep this low. It's possible to go higher from here for sure, but mechanically approaching this, we're going to aim for previous day low. Inside candle. So again, with this approach, with an inside candle, you're more than likely to get continuation of previous day's bias. So we're going to aim still for previous day low. Let me add one more neutral to that. I forgot. Actually, two more. 6. Okay. All right. So we swept previous day high. And we closed inside the range. Again, with all of this occurring, we didn't take the low, we didn't close the high. I would more than likely remain neutral here, because we swept the high and we closed lower, and the previous day bias was already lower before this happened. Then we will continue to aim for previous day low. All right, again, previous day high swept, with previous day low not being touched at all, no close above. So now this day I will remain neutral. I was gonna say bearish. All right, so this is the last day of January. All right, so again we tagged previous day high. This was neutral. All right, so we end the month with 7 wins, 7 losses, and 7 neutral days. So if you are a beginner and you are continuing to lose money, or you are continuously losing money, you have now ended January break even. So what does break even mean to you as a trader? What I think it should mean, in my opinion, is that you live to trade another month. I know most of you will probably not be satisfied with these results. But what this actually means is that you did not lose money, you did not make money, but you do have money still left in the bank that you can continue to trade for another month. And you've gained all the experience of January's price action. Is everyone with me? So I'm going to leave it to you guys. Go ahead and let me know if you guys want me to do another month of this same process of just aiming for previous day high and low, or we can implement the daily calendar now along with the weekly bias. A 100%. Break even is not losing at all. And we should always take that as a W. More bullets for the next fight, 100%. Because think about it in your daily life, right? Like trading always applies to life in some form or fashion. If you have not made this connection yet, I don't think you really have a grasp on the markets yet. Because if you were to go through life every single day and you could break even instead of making money or losing money. For example, every single month, every single day, we pay bills, right? We pay electricity, we pay water, we pay gas. We go to work, we pay gas to get to work. We have to get clothes to go to work. We have to use electricity to get ready for work. We have to use water to get ready for work. Then we have to feed our families, feed ourselves. So after it's all said and done, with the money that you make from work, hopefully all of us are at least profitable by the end of the month. But every single day you may not be winning or losing, but at the end of the month, with arguably 70% of America living paycheck to paycheck, all of us are actually breaking even. And I would say that you've been able to live your life thus far, right? Like, I'm 34 years old and I'm still alive. You're however old you are, you've been living paycheck to paycheck. So you are theoretically break even in life, no? And you actually, more than likely, even though you're break even in life, you probably feel like you're losing, but yet you're alive, right? So to draw that parallel for you guys, I hope that clicks. Again, if I could have you guys just let me know if you guys want me to do another month. Drop a 1 if you want me to do another month. Drop a 2 if you want to move on to a little bit more advanced theory with applying the economic calendar and even weekly bias. We can approach weekly bias as well. Okay, sweet. All right, so before we move on, does anyone have any questions here? Yes, surgical. Yes. Okay. Yeah. So what surgical said, for those of you that will watch the recording and can't see the chat, our trading journey starts from losing to breaking even to winning small to winning big, and even in between all of those, phases change for each season. And this is so valid, and I wish everyone could grasp this idea from the beginning, because I tweeted this recently, but too many of us try to go from losing money to making money, when in reality you should, at least your first stage should be trying to break even. Because if you cannot bring your account out of drawdown, you will never be able to bring your account from neutral to profit, right? So trying to go from drawdown to profit is just bananas. Like, there's a step in the middle there that you can get to very easily. And as you go through all these phases of losing, breaking even, winning small, and winning big, you almost re-experience every tilt, every trigger, every trauma over again from the previous stage. So like, you were losing, you finally learn how to break even, and you have to deal with the trigger of not taking another trade to like bring this break even day into a losing trade again. And then when you start winning small, you have to break the trigger that turns this winning small day into a break even day. And obviously thus going forward with when you start to win big. And then once you win big, you almost have to like calm yourself down with your ego and things like that, because there are many traders that go on to make 30K a day, 50K a day, to also losing 30K a day, losing 50K a day. I was a break-even trader for about 1.5 to 2 years, but in those days I learned a lot by myself. See? And look, he's still here, right? Profitable now, because break even allowed him to stay in the game. If pursuing trading and gaining an experience, no matter if you're paying money for the evals, right? If you're gaining experience every day, you're buying evals, you paid for your Kingline membership, which would actually be free after you get your first payout, but you are in the server, you're gaining experience every day, you're able to read price action, you're paying tuition, right? But you're not losing money, you're simply breaking even. Then you have attained a like $100 million education for free over the course of years. So the longer you can break even, the better, in my opinion, for most of us to gain the experience that we need. That was my biggest mistake too, or biggest mistake, getting too confident when I made big money. I got ahead of myself and now I'm in drawdown overall again. Yes, exactly. And this happens to all of us, Jay, because again, we go through the same traumas and triggers and tilt that we experience in all the different stage. And my bio on Twitter has always read me versus time. And this actually goes back to like my entrepreneurial life before I even became a trader. I've been selling on eBay since I was 16. So like since the beginning of eBay, I've been on eBay, right? And I've always kind of had this mindset of like, even the mindset that I think it takes to pursue trading, I've always had this, right? And basically, like, as an entrepreneur, every day as a trader is pretty much like an entrepreneur, because some days are really big, some really big wins, some days are really big losses, and then some days you just get that base hit to just make it to the next month and you just break even, right? But when you start to make the big money and you know you're not accounting for your monthly expenses that are coming in the upcoming months, and you're not accounting for like everything else, then it's very easy to like leverage all of your profit now and think that you're gonna have the same results that we've had like in this previous month. So I'll give you an example for myself. I started off this year with 5-figure months. So I started off December actually was my first 5-figure month. January, February, March, all successful 5-figure months. March, I was actually barely a 5-figure month, and I was super happy to have made it out alive, because March of last year I didn't make any money. April, again, another 5-figure month. May, I was preparing for a vacation in June. I did not make any money at all in May. Or I did get payouts, but I didn't make money. I didn't take trades in May to get payouts in June, or like payouts by the end of May. I forget. So I had my funded accounts. They all had money in it, but I just didn't trade enough to like get to harvest the payout from those accounts. So in May, I don't know if I hardly took. Let me look at my journal really quick. I can look at my payouts. Maybe I'm thinking of this incorrectly. Okay, yes, May, I got 0 payouts. I didn't take any payouts at all. June, again, back to 5 figures, thank God. And July, on track for 5 figures. Still haven't made it yet, right? But in May, I took no payouts at all, so I'll just show you a screenshot from April to May. Oh wait, I can't because oh yeah, I can. Hold on. So between April and June, I took no payouts. The last payout I took was on April 11th in April, and I had taken several payouts for the first 2 weeks of April. And then the next payout I took was June 11th. So no payouts. And that payout, thankfully, was during vacation. And this is like, once you have a streak of, 5 months in a row of having 5-figure payouts, you start to think that this is going to be every single month. And that's just not the case, right? Like I had a month with no payouts. still in this part of my journey. 100% learning every day. Okay, wait, hold on. Let me catch up with the messages here. We all learn in many ways, easy or hard. What matters is you learn from the mistakes you make. Just got to pick ourselves up and keep showing up. But in all those different days you learn, that's the gem people don't see and is very easy to overlook, especially in trading and our learning. 100% agreed. Consistency beats intensity every single time. 100% learning every day. I was the best loser I've ever been Friday and just trying to take it one day at a time. Past reference, those losses would have caused tilt and multiple account buys, which is not how I should think of it if I want to be profitable one day. Building that mental resilience to maintain that positive expectancy mindset. I appreciate this space wholeheartedly and it significantly changed my life. Yeah, 100%. You have to, all of your past losses, right? Like, they will always come back to haunt you. And what I was saying about me versus time is that every single day you have to fight to tame your demons, right? Like, I luckily have had the experience of my personal life to help me in my trading. So there's not much in trading that makes me go tilt. Like, I've read messages within our Discord where guys are like, oh yeah, I broke my screen. I've broken so many computer monitors. I've like thrown it out the window. I broke my TV. And it's like, dude, like I've never broken any of my belongings because of trading. Like, so I don't know. Like, that's not something, and that's not a trait that I have, and thankfully it's because of my life experiences, right? But you have to work to tame your demons every single day. It's not that, okay, I've been a 5-figure trader for 5 months in a row, there's no such thing as taking a loss now. No, I just took a month with no payouts, right? And so, like, and then I went on vacation after that. Like, so that was actually really hard, going on vacation and like, shit, I didn't get a payout last month. But you know, it is what it is, and you have to deal with yourself every single day. You don't let your guard down. You don't allow tilt to come back in and ruin the progress that you've made. Yeah, 100%. Guys, learn how to cry, please. Crying is also free. Crying is free and it's very healthy for you, I promise. Alright, so let's go with Forex calendar here. We're gonna bring up February. And I'm gonna paste it right on the chart so you guys can see what I'm talking about. Of course, I'm not gonna just I have you guys only seeing trading view right now, but I'll post this on the chart for everyone to know what's going on. Alright, so this is actually going to be a fun week. First week of February ends up being NFP. Or first week of every month is basically NFP. If that month has a day of a week ending that Friday, meaning like if January 1st is on a Friday, that Friday is generally going to be NFP. There's very few instances in which it is not going to be NFP, but most of the time it will be. Yeah, I've cried quite a bit. Like when I used to go on tilt, I don't think what I've experienced I can really characterize as tilt recently, but when I used to experience tilt very like intensely, what I used to do is just walk out of my office and walk into the hallway, like just like if I was working in an office, right? So I would walk out of my trading office and go into the hallway, literally on the other side of the wall, and I would just cry right there. And then as soon as I was done crying, I would go like wash my face or take a shower or something. Guys, also really quick tip, taking a shower does wonders. Applying water to yourself does wonders when you're experiencing tilt or anger. Go wash your face, go rinse your mouth out, go take a shower, go take a swim, do anything, right, that has water involved. And this alone will calm you down significantly. Yeah, of course, if you're near a mountain, go walk on go walk in the mountains. And go outside for a second as well, right? Water and sunlight. And this will calm you down significantly. And what I would do is, like, I would just come back to the office and watch the rest of the day. Eventually what this formed into, or what this turned into, is that, and you guys all experienced this as members of Kingline, is I would just leave the office every day at 11 a.m. So no matter what, no matter how good the trade was, no matter how strong my trade idea is, but maybe it just didn't pan out at the time that I thought it was going to pan out, I just leave the office every single day at 11 a.m. So I give myself a set window to watch price action. Last year it was the neighborhood of 3 a.m. to 11 a.m. This year it has kind of turned more so into 5 a.m. to 11 a.m. I'm not necessarily waking up for London often. I really only stay up for London if price action seems probable, but otherwise I'm not waking up for London anymore. So one session, you choose a cutoff time, and you'll notice, if you journal properly, you'll notice that you actually go on tilt around the same time every day. I have a friend who automatically starts getting anxious 10 minutes before the opening bell, because every single time the opening bell hits, he gets angry. Right at 9:30 on the clock, he gets angry, and he's noticed that before he even sits down at his desk, 10 minutes before the bell, his body starts getting anxious, because he has instilled this habit into his mind and his body that he's just going to get angry when he sits down. Yes, exactly. It's 100% conditioning. I've also touched on this before, but guys, like, you should really go for a walk, take a quick jog, do some push-ups, do some jumping jacks, right? Get yourself, get your heart rate going enough to release endorphins so that you feel good when you sit down at your desk. And over time, you're conditioning your body to feel good when you're sitting at the charts. The moment you feel any anger, you should be leaving the charts, because otherwise you are conditioning yourself to be angry when you're trading. And I've 100% touched on this in live sessions. Cold showers, yes. London has been fire this year. Damn, I feel sad I've missed that. Yeah, it's okay to lose and stand up and just walk away. Yeah, just don't press anything. Like, there's no reason to hurt yourself anymore. That's the vibe, Big M. That's the mode that we're all trying to get to, for sure. All right, so I'm gonna move on, guys. You guys can feel free to chat amongst yourselves in the chat, no worries. I'm just gonna stop reading the comments and get on with the testing here. So with every single day being red folder, we can expect volatility every single day. I'm gonna jump up to the weekly chart. Hopefully it doesn't expose weekly bias. Let me just try. Okay, great, it didn't. Okay, so on the weekly chart, you can apply the same concept and the same logic for weekly bias. Okay, so we were unable to take previous day high, and we did close lower, and we actually did sweep previous day low, or previous week's low as well, but we closed inside the range of previous week. So we were unable to close above the high. We swept the low and unable to close the low. I would actually approach this next week, ironically, as neutral, because we did not close the high, we swept the low and did not close the low. We instead closed inside the range. Again, you can apply more advanced theory here, and you can simply mark out premium and discount of previous week, and you can kind of see where we closed within that previous week's range. So we did close below previous week EQ, and if we look at the quarters, we closed literally in what would we call this, premium of discount, or discount in general. This is deep discount, and this is discount, this is premium, and this is deep premium. All right, so 25 to 50%, this is discount. So we did not close the lower quadrant neither, right? So I would approach this next week as neutral personally, but you can approach it if you want as bearish, being that we didn't close above previous week EQ. All right, So that's just how I would apply logic on the weekly bias. So again, approaching the week with just a neutral bias and every single day having red folder news. What you can expect is that with red folder news, or with the way the economic calendar plays out, you're not necessarily expecting the weekly calendar or the red folder news to form high or low of the week, especially when it's occurring every single day. But you are expecting volatility each day because this red folder news is there, or it exists, right? So your red folder news is more than likely to form high or low of the day, but you wait for that red folder news to drop and you wait to see how price has formed after that red folder news. And then you can usually take a trade from there in the direction of your bias. So again, we're neutral for the week, and because of that, we can apply daily bias as such without having to apply weekly bias to our daily bias. So we would approach it the same way we did the all these examples back here. So we didn't close previous day high 1, 2, 3 times. So now we are aiming for previous day low. And I'm going to start a new box here. Maybe this was for January. I'll just put January here. And we'll do a final tally at the end of this. And then I'll do another guy right there. Wins, losses, neutral. Stop doing it. Alright, so previous day low is a draw. Previous day low tagged. We'll mark this as a neutral because we didn't have the opportunity. So we gapped down, obviously, on this one. We opened the week gapping down, closed all the lows here. So we did close all previous day low. We did not close the CE. So in this scenario, you have the high probability of going back to this volume imbalance. Because we closed previous day low, we will continue to aim for previous day low, and we have all these swing lows that are untouched, right? So we have relatively equal lows here. So logical, we can aim for previous day low. All right, previous day high tagged instead. We close above previous day high. So according to this, we did open above previous day high. So we gapped down to open the week, and then we gapped up to open the day. So this is actually, we wouldn't have gotten we wouldn't have gotten an opportunity to take the long. So technically it would have been neutral, but you know, just to not form fit, I'll take that as a loss. So now we're aiming for previous day high. And again, look at all these days, right? So far Monday and Tuesday, just red folder news on both days. Look at the size or the range of these candles, right? So from high to low with volatility. Oh, shoot, wrong one. 600 point day for Monday, which is not characteristic at all. 450 points for Tuesday. So just high volatility because of the news injections. Previous day high is a draw. Previous day high tagged. Previous day high again. We are on Wednesday. So again, the reason why we're doing daily bias just with the same approach is because this week we are technically neutral, because the weekly bias is neutral based on how the weekly chart closed. And we have red folder news every single day. So yeah, so a win is when we get the daily bias correct. A loss is when we get when we get the daily bias wrong. And neutral is when we don't have a bias and we're just waiting for price to play out. I know you joined late, so no worries. You can feel free to ask more questions if you want. So previous day high is the bias. I'm gonna wait for Yerm to type his message. Yes, exactly. So we have one draw every day, previous day high or low. And that's how we're basically approaching it. So if previous day closed bullish, we are aiming for previous day high. If previous day closed bearish, then we are aiming for previous day low. And we are defining closing bullish as closing above previous day's high, or we are defining bearish as closing below previous day's low. Very mechanical approach. Yes, exactly. Previous day high closed above. So now again, our draw remains previous day high. So this is Thursday. So now we have Friday. So one thing I want to note here. I think, hold on, wait, we got 1, 2, 3. If coming into New York session, our high or low target was met, we sit on our hands. Yes, Dealey, this is personally the approach that I take. If previous day high or low has been tagged before New York session, right? I personally choose to sit out for the day until the narrative presents itself that fits your narrative. For example, let me give you very simple, crude depictions here. We have previous day high here, right? And this happens pretty often. Hold on a second. There we go. We have previous day high here, and Asia opens up and just straight up tags previous day high right away, right? Then it comes back into the range, or it's like slowly dying, and then London comes and sweeps out Asia. And then by the time we get to New York, you're kind of just hovering in no man's land, right? We've already taken previous day high. We haven't broken lower. We swept the lows, and we're kind of in the middle of the range. So because we've already broken previous day high, right, that confirms that the day is bullish. Again, this is if you're going into the day with your draw already being previous day high. So we've already taken the high, confirms price is bullish. Again, we have not broken lower. We simply swept the lows. I would wait until price trades back above previous day high, retests it, and then offers you continuation for you to catch the meat on the bone, right? So basically what you're looking at here is we've opened, we've wicked lower, and now we are expanding higher before the close higher, okay? Another way you can kind of look at this, if it ends up being the opposite, like for you to be again open to possibilities, is Asia has opened up, we took the high right away, nothing kind of happens after taking the high, we're not really doing anything, London comes down, takes Asia's low, same thing, right? Now though, what ends up happening in New York is, or pre-market, we trade higher, right? And then in New York, we test previous day high again, but it rejects it again and shifts lower, right? So at this point, you're open to shorts. So you're using previous day high as your equilibrium or as your midnight once it's targeted. And this is just something that I don't like to do personally. Another thing that you want to consider in all of this is the how swings form or how pivots form in the market. So I've taught this over and over again. According to ICT, pivots form in the market in two ways. You have a breaker or you have a run on stops, in which we ran buy stops, or you have a return to fair value, in which we've traded higher, we have a failure swing of the high, and we trade lower. So there's usually some sort of fair value gap here. Good Lord. Fair value gap. Even better if it's a BPR. Even better if there's an old swing high to the left. A combination of these two looks like every swing high you've ever seen in your life, where it runs buy stops, you have a breaker, it trades lower, it returns to fair value, and trades lower, right? So what do you have? You have a run on stops, you have a BPR, and you have a fair value gap. This is like A plus, right? So again, with the main thing being that now, instead of using midnight as your like main EQ point. You're using previous day high and low as your main EQ point. And this is only if you continue to trade for the rest of the day, right? Otherwise, you can just choose to sit on your hands. It goes back to test midnight. It comes back up above previous day high. Then you're good to go long. It goes down to midnight. It breaks midnight. You're probably good to go short. Hey, Anya, how's it going? How was your opening week? I think this was the first week, right? Yes, yes, yes. Thank you, MK. Appreciate that. This happens all the time, guys. Like, midnight, daily open. 6 p.m. open, midnight open. And daily high and daily low. Literally, if you just have these 4 points on your chart, you will see the narrative form every single day. Okay, we broke previous day open. We're now above previous day high. We're bullish. We broke previous day open. We broke daily open. We're above midnight. We're above previous day high. We're bullish. We broke. We're above daily open. We're above midnight. We failed previous day high, and now we're back below midnight. We're bearish, right? Like these simple things. I don't know if you guys can visualize what I'm saying, but it's very easy to like start to form a narrative after these key levels are tagged. Just previous day high, previous day low, daily open, and midnight. Nice, Stefan. That's what's up. Good stuff, Anya. All right, so we're on Thursday. We have one more day. Let's just play this one more day. Okay, so previous day high tagged, but we did close lower. So this is an example. This day we more than likely traded above previous day high early in the night or evening, and then by the time New York opened, we were below previous day high, and thus then traded through EQ of previous day, and then traded through previous day low, and then, you know, obviously you can aim lower. Do we consider closing prices like previous day settlements? Are you talking about like what's set on and off down here? Oh shoot, I just messed it all up, didn't I? Okay, let's go back now. Sorry, I didn't mean to expose all the data here. We'll play one more day. Yeah, so this is electronic hours closing, right? So this is 4:59 close. So the daily candles are from 6 to 5 every day. So you just go by the electronic hours. Another thing, guys, for like daily, so to expand more on that, because the reason I'm teaching daily bias is I'm kind of going back and teaching the foundation for how we're using daily bias for the model that we're backtesting currently as a group, the 5-minute Q3 manipulation into the 4-hour expansion. The foundation for that is this, right? This is why we're approaching daily bias like this, where we're just doing it in the direction of previous day's close. But if you use the foundation that we've taught you already in this video, we did, let me bring it up for you guys and link you for those of you that are not familiar. Adrian and I did a video on 1 hour standard deviations, and this is basically how we are able to determine bias for the rest of the week. It's something that I would encourage everyone to do. But if you use this type of framework every single day, you can start to develop your bias as price prints throughout the day. So let me just jump down to an hourly chart really quick to show you guys what I mean. I'm gonna clear, let me lock all of this. I'm gonna clear just the news maybe. Okay, never mind, we can't see it anymore. We'll use all of this as an example. Just really quick, I'll try to make this as fast as possible without going too far off on a tangent. So we have Sunday open, right? We're going to mark every single day midnight to midnight. We're not going to use electronic trading hours, right? So midnight of every single day. All right, so again, the day was or the week was actually neutral coming into this week, the first week of February. We were neutral because we did not close previous week high and we did not close previous week low. Point blank period. We just closed inside the range. So we were neutral this week. Very simple. On Monday, we were expecting previous day low, which we did get, right? But we did not but we did not have the opportunity to trade into it. So I marked that as a loss, I think. I think that was the day that I marked as a loss. No, sorry, this is the day that I marked as a loss. So this was a win. We got this previous day low, but we just didn't have an opportunity. So then from here, once we close above previous day high, we're simply aiming for previous day high, and every day was a win after that, right? So starting from Monday on the hourly chart. Thanks, Big thanks for that. For those of you that use NinjaTrader, definitely read Big M's messages. It's good to have tools that are on your platform that you're actually trading on. I know not everyone necessarily uses TradingView. All right, so every single day we mark out midnight on our charts. So open is at the low of the body. So TDO. So we've marked out midnight to midnight every single day. I'm just going through and marking out TDO now. And this is now, we've gone down from weekly bias, which again, you're approaching the same as daily bias. And then you're marking out, you're approaching daily bias based on closes. I'm going to bring it all together at some point when I go back up to the higher time frame, guys. We only did the NFP week, so we'll get there. All right, so the very first deviation that we have formed technically, because we just traded straight up, right? We came down, we gapped way down, and then we closed higher, right? So we closed one day higher, and then every day from there we were bullish. So the first deviation that we technically have is really just this candle, like this, because this creates the actual low. So we'll use our deviations here. I would say like the first clear manipulation that we have is technically this one, from this high to this low. Oops, wrong direction. And I say that because we swept the low first and then shifted higher, right? And after the shift higher, this is the first real manipulation that's occurring without this like gap down that's just kind of opening the week up, right? So now when we draw these across, 2.5 is up here, right? We kind of end price action in the same area, and then 4 hitting the extreme. Look at the bodies. Okay. So first manipulation happening there. So the homework was to just find your 1 hour swing of the week and then wait for this deviation to sort of play out for the rest of the week. Now, because this week was neutral, we were just going to approach every single day daily bias wise, right? With no higher time frame weekly bias affecting our daily bias. So once Monday closed bullish, we were simply aiming for Monday's high on Tuesday. Once Tuesday closed bullish, we were again aiming for Tuesday's high. So forth and so forth. So Wednesday closes bullish. On Thursday we're aiming for Wednesday's high, which ends up being the same as the midnight price on Thursday. And then because Thursday closed bullish on Friday, we're aiming for Thursday's high. Right, so that's what it looks like lower time frame playing out. And every single day what you'll notice is you have a very tiny manipulation below midnight into previous day's high, right? So this, not in this situation because this was Sunday and Monday, and then here on Tuesday we manipulate below midnight, we trade into previous day's high. We manipulate below midnight, we open low first, we get to midnight holds up perfectly. As soon as we close above it, We trade lower as much as we possibly can. Nobody below. Closing still above midnight. I think this misses midnight for the retest and then straight up into previous day high. This is a 1 hour candle, right? So this is the candle that you would have wanted to have been in on this day. Straight up into previous day high. Same thing here. So again, this is ambiguous because we took previous day high beforehand, right? We trade below midnight. We retest midnight, failing to close above, we trade lower. We go back to midnight. We trade lower again, failing to close above. We close above. This would have probably stopped a lot of accounts out. We close above, we close lower, we close higher, we get the retest, it eventually trades higher. And then same thing on Friday, we are consolidating on midnight straight into previous day high before it shifts lower and trades lower. So see, like, even as we bring these ideas to lower time frames, just going from midnight to previous day high, or we can even like to change the test to go from daily open at 6 p.m. to previous day high. These are very, very simple targets, and for most of these days you're really getting the meat on the bones, right? You're really getting the nice chunk or the low resistance price action that will get you from one entry to your one target and be done for the day. Okay. Sorry, hold on. I have to. I can't. So yes, this is being recorded. I don't know if you can see the red dot here. So that's being recorded. Let me go up. Do we consider closing prices? Yes. Okay, yeah. I think I answered all the questions. I don't think there's anything that I missed. Was there anything that you wanted me to answer? Oh, and neutral is when we don't close the high or the low of previous day. So like this here, oops, I'll just delete this. This here on this day, for example, we did not close previous day high and we did not close previous day low. So the next day we approached as neutral. And so these are just the days that we approached with no bias, meaning, you know, we can apply the 1 hour bias at that point. We can look at 1 hour price action at that point. So if you don't have higher time frame bias, like you don't have a weekly bias because we were neutral going into NFP week, you can apply daily bias. If you don't have daily bias, you can then implement 4 hour or 1 hour bias. And you can do the same idea where you are just looking to close above or below your previous candle. Because we tagged previous day high. It's not where it closed, it's did we tag it. Because it can always close in the opposite direction. But ideally, because on this day, more than likely what happened is previous day high was already tagged before we even started to trade. But the bias was right in which we tagged previous day high. Like that was a draw on the day. For those of you that are new to my backtest sessions, Yerms does this to me every single weekend that he's here. He just bombards me with questions. It's always welcome. It's always, so I don't want you guys to think that like he's being annoying to me. He literally does this to me all the time. Yeah, so it's not how it closes. No, yeah, no. You're not being annoying because most people probably have the same questions. They're just afraid to ask, or they don't want to interrupt, quote unquote. All right, so now let's look at the second week. Does anyone have any more questions? I kind of went down from weekly to daily to hourly in a really quick fashion. I'm gonna try to bring it all together for the remainder weeks. We'll do the rest of February. And then we'll see how, you know, we can look at how that all comes together. But hopefully, like, even from the hourly chart, you can see how these are very simple targets. Again, just daily open or midnight. You can choose either one or you can use both. To previous day high or low. Very, very simple. Even better when previous day EQ aligns with midnight or aligns with daily open. When you made your PDF for rules of engagement, what did you use to make this document? When I made my PDF, are you can you show me what PDF you are referring to? Because are you referring to Backtest Jess or are you referring to another Jess that trades in the trading space? Because I just used Google Docs. And you know, a lot of people here think that I'm Trades with Jess, or they think I'm another Jess, and I'm not. My literal name across all the platforms is Backtest Jess. It's the same username. I'm Jess21. So you know, I don't know, sometimes you guys think I'm another Jess. I'm not that Jess. I'm this Jess. I'm Kingline Jess. So if you could share the document, I can confirm with you. Okay, sweet. I'll just show you what my document is really quick, and if it's not this document that you're discussing, then it wasn't me. Let me see if I can zoom out. Okay, it's this guy here. My whole life, Stefan. Literally my whole life. This is all my friends, my brother. Okay, great. So this is just Google Docs. Sweet, Jay. Awesome. Yeah, this is just Google Docs. It's nothing special. Or what do you mean by what did I use? Okay, great. You meant Google Docs. Okay. Thank you. No worries. If you want, I can upload the actual PDF for you. If you don't already have that. There we go. I might actually have to make a new version for you guys, because I did change my risk management from 250, which I think is written on the PDF, to 25% of drawdown. Alright, so let's move on, guys. Sorry for the tangent again. Yerms, I apologize. I know it's I'm always bouncing around. So the next week is actually no better. This is actually hilarious. The next week is also red folder news every single day. I'm hoping to like paint some sort of bias for you guys to be able to paint like previous or high and low of the week at some point. So every single day on the second week of February, we also have red folder news every single day. So first we're going to jump up to the weekly bias, right? So we failed, or did we not? Okay, we took previous week's high. We obviously closed inside the range here. We closed well below EQ of previous week's range. So I personally would be inclined to aim lower on this week, because we closed below previous week's EQ. We swept the high and closed inside the range. Does that make sense to everyone as to why I'd be aiming for lows? So I would aim for previous week's low. We also have equal lows here. This is just, I'll bring this in so we can see this on the lower time frames. Sorry, relatively equal lows. Maybe it's just equal highs and then previous week's low. Let me jump into the chat. Okay, aren't we above previous week's EQ? We closed above previous week's EQ. Oh, sorry, you're completely right. Sorry, I'm colorblind today. Okay, yeah, you're right. So we closed above previous week's EQ. Ooh, this is interesting. So there's two ways that you can approach this, which I've gone over in the daily bias situation. Is that you can aim for previous week's low mechanically, right? Because I'm lying. The mechanical approach would be for previous week's high. And because this is an inside candle mostly, in that we barely swept previous week's high, we came back inside, we didn't sweep the low, and we closed above EQ. Mechanically, we would aim for previous week's high. You're completely right. But you can choose to be neutral, because this week we closed inside, or we're inside the range. So you can approach this week again neutral. I would personally approach this with aiming for previous week's high. Completely right. Thank you so much for calling me out, Yerm. This is why it's appreciated. Yeah, so that's the thing too, Stefan, that's a good point, is that everyone should really be charting EQ. I mean, sorry, NQ. Everyone should be charting NQ. Like, you can trade MNQ all you want, but please, for the love of God, chart NQ. In my opinion, my humble opinion. Sorry, that's the wrong chart. I'm getting ready to trade. Okay, so weekly bias is bullish based on this. Okay, let me put in previous week's high. So weekly bias is bullish. So that means on the daily chart, we are waiting for some sort of daily swing low to form, right? So again, weekly bias is bullish. On the daily chart, we are waiting for some sort of AKA swing fail pattern to form, or some sort of swing low to form to trade higher, to catch the meat on the bone for daily for a bye week. Okay, I have a really cool screenshot for you guys on this. Oh, Stefan, I forget that you're always following on your own chart. I forget who made this, so I can't credit the person who made this, but this is how I look at all models. This is how I look at all price action. There are just different iterations of the same thing, so it's really dependent on how all of us, or each of us, are internalizing price and how we read it, what we decide to use. For example, Cozy really likes to reference previous day EQ. I like to reference daily open, daily midnight. I like to also reference previous day EQ, OTE, and 25%, right? So like Adrian also does previous day OTE. So again, it's all about how you want to internalize price for yourself. There are some people who use VWAP. There are some people who use the POC. The idea, or the, oh, it's too big, darn. Hold on, let me see if I can get a different cut of it. The idea is really the same across all things. And you know, I'm sure that someone is gonna roast me for saying this is like pattern trading, but hold on, I need to move my screen out of the way. But it's really all the same. We're kind of all looking for the same thing to play out, but we're maybe just paying attention to different things to occur in price action using different points of reference, right? So again, Cozy herself might use previous day EQ, JD might use today's midnight, someone else might use VWAP, someone else might use POC, someone else might use volume. So we are looking for something like this. Our weekly bias is bullish, right? So we are looking for an open, low, high, close. That's all that being bullish means. We're waiting for an open, we're waiting for a low, we're waiting for a high. Once that high is targeted, then we don't need to participate in this bit of high to close. This is generally TGIF, right? Yeah, Big M, dude, if you make money, do it, you know? Like, no one's hating. Or you can look at this as AMD, accumulation, manipulation, distribution, or expansion, distribution, right? And then you can look at it as like a Monday high and low, Tuesday low, expansion, or I think this is the box setup. And then you can only pay attention to the weekly open. So we've traded below the weekly open, we've traded above the weekly open, now we're bullish for the rest of the week. These are all very simple approaches. You can even use Monday's open. You can use Tuesday's open. Whatever tickles your fancy, and this is the key level that you like to pay attention to, just stick with it. Don't use previous day EQ if that's not your thing. Don't use midnight if that's your thing, although midnight I think should be everyone's thing. And then, you know, don't use previous day high or low if that's not your thing. But whatever key level you're paying attention to, just make this consistent for you and don't jump around from one thing to another. Okay, so same exact iteration, literally the same concept across. We're looking for price to expand in one direction. That's the means of bias, period. And if you're looking to take price action with one direction, you simply reduce the amount of trades that you take, more than likely reducing the losses that you take as a consequence. That's the only reason to apply bias. If you are more advanced and you like to read price action a little bit more discretionary, you don't have to use a bias. No one's forcing you. All right, so again, we are aiming for previous day high, or sorry, previous week high. So we are simply waiting for a daily low to form. This is going to be hilarious if we just open up and take previous week high immediately. So let's just see. On this current day, because the previous day closed bearish, we expect that previous day low is going to be tagged. And hopefully within this volume imbalance, we will have some sort of swing low form. So we can probably assume, again, just using more advanced theory, is that we have something like this occur, right? Where we open, we sweep or we fill this volume imbalance, we close higher to form a daily swing low to catch the expansion of the weekly range. So this is theoretically where the open would be, because the close of previous week was here, assuming it doesn't gap up or gap down. So previous day low being the bias for today until the weekly low forms. So we open lower. We weren't able to catch that low, so I'm going to mark this as a neutral. So weekly low was obviously tagged. We weren't able to participate in it. So what I mentioned exactly happened. We went into this, we filled this volume imbalance, and we closed higher. So now previous day high, which is the 2-day high, previous day high, 2-day high, and previous week's high is now the draw. Okay, yeah, I have that on the right one. I'm just gonna steal this guy. So previous day high is the draw. Again, we have equal highs here. We also have relatively equal highs up here. Relatively equal, according to ICT, can also mean closeness in highs in time, not necessarily in price. Yeah, because we did tag previous day low. We did open below previous day low, but we were not able to participate in the price action to tag previous day low because we opened here. Right, so yes. Yes. All right, so previous day high, inside candle. So again, another neutral day. We didn't take the low, so we weren't wrong. And we didn't take the high. So we are an inside day. With inside days, I mentioned that we are going to follow the bias of previous day high because it's more than likely a continuation, because an inside day is what? It's a retracement, right? We open here, we retrace. This probably didn't even hit EQ, and then it's going to trade higher. But it's more than likely tagging previous day EQ in most situations. When it's an inside day, we close above EQ, it's more than likely going to be a continuation. So I'll draw out premium and discount here for you guys to see. I'll even just do the quarters, and then I will excuse me, pull this out. So we close in deep premium here, actually. So we missed previous day EQ, we close in deep premium. So we are again bullish going into this next day. And now what do we have? We have exactly what we wanted to form. We have a swing low. So now we can more than likely assume that a weekly low has formed here, and we're looking to catch the weekly expansion up into previous week's high. Now it's a little disappointing that we're so close to previous week's high here, but we are looking, to trade higher as a result, or just in general. Okay, so here we are wrong. We form another swing low. We sweep previous day low, but we don't close above it. We're still inside the range. So same bias in my opinion here, because again, when we pull this range, we closed above EQ. So we're closing above EQ. We're not in premium, or we're not in deep premium, but let's mark this as a loss here. So I would keep the same bias. The candle is bullish. We swept the low and we closed higher, again above EQ, so remaining bullish. So finally we tagged the overall everything. We took all 4-day highs. We took previous week high and relatively equal highs. And now let's look at how this applies to the economic calendar. This day was Thursday. So this is very classic. So CPI Wednesday, PPI Thursday. We had a swing low form already, right? And again, this was a retracement. This inside candle was a retracement. It possibly wanted to retrace higher or lower, so I'm going to show you guys something just from the daily chart. When we draw this candle's range, right, we're going to bring up OTE. Oh shoot, why is it not showing? There we go, OTE, and it tags 0.79. And for those of you that have been following the backtest, 0.79 is a very important level. So we swept previous day low, which is above EQ. So we never even tagged EQ of that candle, right? It swept. Oh, I remember this week. Ooh, I remember this week. We swept previous day's low, and we went to 0.79. So this is a classic SBS situation where we have a 1, we have a pullback 2. We didn't take the high, so I guess I would technically be wrong, but you would take 3, you would normally create a new high, and then you would come back and sweep liquidity above EQ. So at the same time that you're running sell stops, you are returning to discount. We tag 0.79 and we expand higher. So deep retracement into that expansion that we were looking for, and it takes out all the liquidity. And what I was saying is that on this day being CPI, where we formed this doji situation or this swing fill pattern or this reversal candle, you can expect that PPI is going to be the distribution and continuation of this manipulation. Does that make sense to everyone? We expanded higher already, right? So we started. This is basically what it's showing is we've expanded higher to start the week. We had a retracement, we had a deeper retracement, and then the next day we expand higher. So this is a classic continuation pattern, you know, for pattern traders. So previous week high, relatively equal high swept. Friday we have core retail sales. Because we have a firm close above all these swing highs, the next day is likely to be another expansion day as well, because you know, you can usually expect 2 to 3 large expansion days before another consolidation. So we've had a long period of consolidation here. We're going to aim for previous day high again. I don't know if I marked that. I think I did for the win. We'll aim for previous week high. Okay, so previous week high met. Or sorry, previous day high achieved. Closing there. All right, so we're 2 weeks into February. I'm going to try to bring this all together now. Let's jump down into the 1 hour chart. So again, our weekly bias was bullish because of the weekly close. We closed above premium. Our daily bias, we were simply bullish after the swing low formed. That's simple. We had a key PD array, which is a volume imbalance, which is also known as an NWOG, right? Or a end dog for this one, since it's on the daily chart. We had a daily volume imbalance. We traded into it. We have a swing low. CPI forms another swing low, or it has a deep retracement into our OTE area and closes in the range, creating a swing fail pattern. We expect expansion for the rest of the week, point blank period. Now going into the 1 hour chart from that in that price action. Let's see if I can grab all these and just scoot them over. Double check. Midnight. Okay. So to kick off the week, we just straight up gap down all the way to here and we close higher, right? So on Monday's from Monday's trading day, we were aiming for previous day high, which is this line right here. And we don't have, let me delete this. We don't have a manipulation yet. We can use this candle to start because this is all we have to go off of based on like current price action, right? So like assuming that we don't have anything for Monday, this is the only candle that we have to work off of, right? We opened low, we traded higher. This is the only manipulation or deviation we kind of have to offer ourselves. So we don't reach 2.5 here. We reach for 2, and then price kind of consolidates in this area. And then we consolidate on Tuesday. It ends up being an inside day, but we do close higher than the open. Let me go back and mark out the midnights really quick. I love the hourly chart so much. I really do. Open. And that's Thursday. Wait, one more. Okay, and midnight one more time. Alright, so Monday closes higher. Let's just assume that we waited for Monday to give us bias on this 1 hour chart. But we were aiming for previous day high. We did not close above previous day high. We did not close below previous day low. So this was a day that we were neutral, but still aiming for previous day high because of how it closed above premium of this day, right? So if we pull the low to the high electronically for the electronic hours, we closed above EQ, which is what gave us the bias for previous day high. This is the OTE from that high to, or from that low to that high, right? So we mostly consolidate on Tuesday. Wednesday comes down, sweeps liquidity above EQ. This is a very classic signature of price. We have resting equal lows above EQ. Oops. Resting equal lows above EQ. Price comes down for CPI, takes out all this liquidity, and sweeps 0.79, wicks it. We close above, we get a BPR, and this is our first, or inversion, whatever floats your boat. This is our first real manipulation of the week. This is where I would actually use deviations now. Ooh, so we only get to 1 there. Alright, let me make sure I got that. Yep, okay, so we trade higher, in which we close now. We finally close this high. So again, we're aiming for previous day high, right? And notice on this day, we manipulate below midnight and we close higher. So now we're aiming for previous day high. So on, again, Thursday, expecting a continuation from Wednesday's price action, we trade lower, we trade below midnight, we go into this key PD array. I'll just mark out OTE of previous day for you guys to see. Doesn't look like it hits EQ at this point. So it doesn't hit EQ. This BPR inversion holds price up. We trade below midnight, or we manipulate below midnight, and we trade into previous day high. Right, we come back to previous day high to retest it. Like I mentioned, if it's hit before New York, we retest it and it trades higher. And then why is that a BPR? Whatever floats your boat. I would call it a BPR because when you have wicks on either side of the candle, it is you assume that all of this is balanced, right? So it's the same, it applies the same way that you have a fair value gap there. So because all of this is also balanced, and so for example, you have a lack of wicks on this area, right? And then when we close up here, right, or when we start to close through this price action here, you have gone through this twice. So you go up and you go down. Then you open here, you go down, and you go up. And then same thing, you trade higher and you rebalance all of this. So all of this, even though there's an imbalance on this side, because there's a lack of imbalance on this side, we've balanced all this price range, which is a BPR, balanced price range. You see what I'm saying? So I have the literal PDF for that somewhere that I've shared here before. But to me, a BPR and an inverse fair value gap are interchangeable most of the time. There are very few times, yeah, that's what most people look at a BPR as. They only look at it as a fair value gap on both sides. I literally just like, for example, let me see if I can find one. Like this area here, for example, this area where the wick, oops, that's not what I wanted to use. This area here where you have body, wick, body. This area here is a balanced price range because you have a wick coming down and up, you have price action coming down, you have a wick going down and up, then you have a wick going down and up, and then you have price action going up. This area right here is a balanced price range, which is why you see price being supported here. Yes, that's a again, think I don't know, what's the analogy that ICT uses? A paint roller. I've seen someone else use another analogy in the chat before. Aside from a paint roller, what is it? I don't know, cleaning windows. Like all this where you're going up and down multiple times. You know, you've cleaned this area already. You've already covered this. This is good to go. You don't need to go back to that area. So just, you know, scrub a dub. All right, so now we've closed previous day high, right, firmly. So now again, bias is previous day's high, which we open immediately anyway. I don't know why this one moved. We open and tap it immediately anyway. We manipulate below midnight, we close back above midnight, and previous day high holds up, we trade higher. So see, if you wait until your swing low forms, which is formed here, and then you just continue to trade bullish, you will more than likely catch the meat on the bone for every single day, lower time frame, and daily into the weekly. So again, our weekly bias was bullish. Every single day, we were just simply waiting for a swing low to form. We had it form here. We had the confirmation of the swing low forming here once Tuesday closed. Tuesday, we were aiming for the high. It got us as high as it could, but it ended up consolidating for the rest of the day. Why? Because the first or significant red folder news of the week is actually PPI for that week, right? So going back to the thing, PPI is the first thing. You only have Fed chair speaking or testifies and President Trump speaking every single day, which is a red folder events for these 2 days. So, you know, just chaos on these 2 days. But the first actual like injection of volatility is CPI and PPI, because these are CPI, PPI, core retail sales. These are our actual news events. These are just random, right? Or, you know, quote unquote random. But we have our swing low form, bullish close. We get our bullish confirmation for the week. Tuesday doesn't deliver the way we wanted. We get CPI manipulating lower, then closing higher above midnight. We're bullish for the rest of the day, right? So if for example here, when it closes lower after CPI and then we close higher, at this point our bias or our draw of previous day high is still untapped. So once we're above midnight, you can still aim for previous day high. Because previous day high closed higher, we manipulated below midnight. We're simply waiting, or we're looking for the opportunity to trade into previous day high. The next day, or even if you caught this, or maybe you're looking to hold, or you want to catch another long, we come back and retest previous day high, and you're able to hold that even longer. The same day or the next day, previous day high close bullish, we manipulate below midnight, you can hold into previous day high, or you can wait until we close above previous day high and midnight, and you can wait for higher. Now this area of like trading higher, this is I wouldn't say high risk, and I wouldn't say high probability or low probability. I would just say it's higher resistance. It's not as easy as catching the long from midnight to previous day high, or it's not as easy as you know, whatever opportunity you have before that previous day high draw is already tagged. So once that high is tagged, I find that price becomes very high resistance, and I don't necessarily want to be in it. Okay, so does that bring the picture to, like, does that bring that all together for you guys? Does that, you know, weekly bias, daily bias, hourly bias, this should even as you bring this down into the lower time frames of 15.5, like you should really be able to figure out what direction you should be trading in very, very easily and simply based on what we went over today. I don't want to stay on any longer because we've already been on for 2 hours, so I want to try to keep this a little bit short. Again, credits in this video, you would want to maybe watch ICT Master High Probability Scalpings. You're going to want to watch AM Trades Weekly Profiling, and you're going to want to watch TTrades Daily Bias. Literally, that's how I approach bias, using a combination of all these things, and they are all foundational upon one another, and they all build upon one another. Any questions, any concerns, comments, confusion? You're Maya, I'm talking to you. Just kidding. Just kidding. But no, anyone else, if you guys have questions, feel free to let me know. Obviously, you guys can see now we're winning. Only 2 weeks into February, so obviously this could still play out and where we start to lose for the rest of the month. But this is a good exercise, as you can see. Like, literally go by your weekly bias, go down to your daily bias, and then see how the narrative formed on the 1 hour for you to be able to see these things in real life. So if you guys know my model as a trader, I normally just wait for a 1 hour change of state delivery. Once we have a 1 hour change of state delivery, I'm waiting for a 5-minute model to form. So let's go into this area right here really quick. We have a 1 hour CSD forming here, confirmed, right? And so now, since we have a CPI manipulation, my best trading day has always been Thursday. So let's go down into the 5-minute chart on that Thursday, right? And just ironically, ooh, I think I caught the long this day. Just ironically, we have my model forming in this 1 hour BPR, right? So we have 5-minute coming down into this area. We run sell stops. We trade higher. If you know my model, I'm looking for 2 gaps. 1, 2, and a block, a solid block. So in this case, we actually have 2 solid blocks. We have an order block and we have a breaker, right? So there is no entry for me at this point until you draw it forward. All right, and then we can add on this, onto this, we can add onto this OTE. So this would be where I would have tried to get in. If I'm not mistaken, I probably longed here, held, and then got stopped out, broke even, and then let me see if I have it in my journal. But I'm basically looking for a 5-minute model from the 1 hour model based on the daily bias. That's like very, very simple. It's not fancy. I'm not like super like, oh, I can read price so good. There's nothing like that going on, but it pays the bills. Let me go back to February and see if I have a trade that day. Journaled February 13th. Bear with me. Let me just go back and see. Let's see if it can. Ooh, it's not letting me do it. Oh, there we go. Do you guys see the trade? Great. So 799. Wait, this is the same day. No, sorry. 21,800. Wait, this isn't the same day. February 13th. Let me go back and check my journal. It's literally the same day. 13th. Yeah, I don't know why. Hold on. Am I losing it? 21,800. And we're in 22 here. Yeah, I don't know why it's not matching up. This is the journal entry that I have from that day. Oh, here. This is the full chart. So it's from the 7 a.m. entry, which is here. So you can see the price action is the same right there. So right here. So I got in there. But this is literally just my model. This is exactly what I trade. Again, I don't know why. I guess because of the continuous contract versus the front month. But that's how you bring it down. Yeah, exactly. Okay, guys. Yeah, I was trading NQH. Alright, any questions? Comments, complaints, concerns? Again, this is a really, really simple... You can just do a tally backtest like this. This is a really simple approach. And just imagine if you are onside more times than not, or even break even. Break even is not a bad thing. Thank you so much, Anya. Appreciate it. Thank you guys all for tuning in. The video will go up sometime tonight. My pleasure. Have a good weekend.